Hey, Forex fortune hunters. We talk about how to interpret the Metatrader charts in this series of videos. We posted one on Tuesday of this week. I'm recording today on Friday, the 18th of June, 2021. I wanted to come back and re-comment because it was a huge week for the currency markets. The Fed Open Market Committee meeting was announced and the results pronounced on Wednesday by the Fed Chairman Powell, and it's had a huge impact on currency valuations. So I want to talk about how interest rate policy is the number one key factor to keep in mind as you're in your trading, whether long-term investment, whether some kind of a swing trade, or whether scalping on a 1-minute chart. Number two, I want to talk about time frames. I want to tell you how to use longer time frames to ensure that you will increase the probability of success when you're using a 5, a 15, or even a 1-minute chart. So, if that's of interest, I think it can help with your trading success. Hold on to your hat, and we'll get started right after this. Okay, fortune hunters, this is our agenda for today. We're going to review how interest rate policy can have such a dramatic effect on our currency trading, and we're going to talk about time frames and how it's best for you to keep a higher time frame in mind when you're working on a lower time frame. Higher time frames very clearly tend to cement whether you're going to have good price action in the direction that you're hoping to take your entry. So let's get started with that. I don't usually try to shill for my books, although I'm pretty proud of both of them. Forex Power Surge is a bunch of different templates based on some of the things we've experimented with over time, and it includes things like a review of Double Whammy and all the ones that I've talked about in our videos. But the one that came first was the amazing Zeelander Flytrap trading system, and I think it really does make some very helpful points for especially beginning Forex traders. And I'd like to come back to one that's critically important now. It really is the central, the central theme of all currency trading, and that's interest rate policy by the various federal by the Fed and by the other central banks around the world, not the least of which is China, of course, too. Although China's currencies are pinned, much as the Swiss franc used to be pinned and more difficult to get involved with, the other banks really are kind of in competition with one another to get to either reduce the value of their currency or increase it, depending upon their strategies. And so interest rate policy, the bottom line on it, attracts investment capital or shoos it away. Now, back in 2014 and 15, I remember a very important European Central Bank interest rate announcement. And I've got a weekly chart of the euro and the USD on the wall right now, which talks about 2014, amazingly enough. This was back in the June time frame, April, June, the spring of that year. And you can notice here the huge downturn. Now, I wanted to, as I said, shill for my book a little bit. Back in 2015, we had this particular chart in the book talking about how when Mario Draghi was the president of the ECB, he announced that fateful day that the euro was not only going to, the European Central Bank was not only going to reduce interest rates in order to stimulate their economy, but they were also going to take a trick out of the Fed toolbox, and they were going to begin to buy bonds. This was the policy that the Fed had done in the after the 2008, crash of the markets in order to get things going again. And so Draghi took a page out of that book and off they went. And notice what happened. Because it was going to cheapen the currency over the next 6 to 10 months, we had a drop from 140 all the way down to like 106. And we documented that in our book and talked about how interest rate is so critical. Notice this is the issue. And notice also, I'm pretty excited about this, we have the T3 Tilson 24, we have the EMA 47. I use them both, actually. I know some people will say, oh, it's too messy, it's too messy. Well, too bad. That's the way I like to do it. We had a crossover here of this. Now, I don't have my medallions on here, so let's go back and let's view the navigator, and let's put our Wilmot cross in place here. We're going to make that true. We're going to wait for the bar to cross. On longer term time frames, you may want to have the medallion appear earlier, and we're going to make this a 6 and a 12 EMA, and of course that's now going to be based on the weekly charts rather than anything lower than that. Now let's see what we've got going on. There's our, it changes it, so let's go back and let's change that around a little bit more. We're going to bring this over from our other monitor, and we're going to have our Wilmot cross edits, and what we're going to do is go to colors, and we're going to make this one nothing, because we already have our red and our green in place. We're going to make that nothing, and we have here, we would like to have white, and we'd like to have our aqua. Okay, and we're going to put these a little bigger, and this is how you do it each time you want to make indicators change around. Notice that this is where we had our crossover right here. And so if you don't want to eyeball it, you can see right here, this is the place that it took place. So now what we have is we have this move to the downside, and then we have a pullback, and sure enough, as we're crossing down through the 47 EMA on that weekly chart, we have this fractal to the north. Now remember what we said in our last video, you don't want to pay attention to these as much as these. This is a downward facing set of moving averages, and so we're only going to be concerned about trying to get through those to the north. And so here we go. That's the one that tells the tale. And so down here, as we cross down through that EMA 47, notice the move we had back in 2014. A huge move of over 1,000 pips. And as I said, we went from 139, 136, all the way down to 106 during that time frame. Now, the move this week wasn't obviously quite as dramatic as that huge move that we had back in 2014, but nonetheless, you can see the impact of the interest rate policy potential decision to reduce the bond buyback program, to maybe raise interest rates in 23, and so the market reacts accordingly. Now, let's take a quick view over here at the same thing, and notice here, we move this line out of the way, we have this move on a weekly chart. That's been the dramatic move. Now notice on the weekly chart, although we're through the T3 Tilson, and although we've gotten down close to the EMA, this could still turn around. I mean, look at this right here. We still have a situation where we have, if you look at the King's Crown or the upside down movement of this sort, we have this shoulder and we have a potential shoulder over here. So the question is whether or not it's going to hold in this area and maybe reverse. That's something to keep your eye on. Now, if we take a look at the daily chart, we see the huge move to the downside. And notice, really important here, notice that there is no reversion to the mean being this 6 EMA. There isn't even a pullback. Look at the pullback here before this happened. We pulled back, but now we've just had a column just down. The only way you're ever going to get a counter trend trade to pay anything in this market is for this kind of a wick on the bottom of the candle to help you on, say, a 1 or a 5 minute chart. We're going to get to that in just a second. Get rid of this one. So now let's come down and let's take a look at the 30-minute chart and see what's happened here. Notice that in the first day, we just had a complete downward move. We had no pullback at all, even on the 15-minute chart, just constant selling. Then the Asian session kind of, mellowed out a bit, okay? But then we had 2 of our fractals to the north, and we had this nice candle right here on the 30-minute chart, which was downward. It pulled back a little bit, but notice with the fractal, this is actually good news for us. It didn't go so far that we have to get in way down here. We can get in a little higher up. So let's move our vertical line to this area, and let's drop down all the way to the 5-minute chart and see where we can see. Notice we're below all of these lines. We've had 2 fractals to the north. Even if we pull back in this area, this is a challenge to the 12 on the 5-minute chart. But if you're trading the 5, waiting even till the London Open, you can see this is another push to the downside as everyone's trying to get out of the euro. If we move over here, let's go back to our 30-minute chart. Notice that we had a little bit of an up move, but we never were able to get through to change around on a 30-minute chart. Any meaningful move to the north, just this few set of candles that came up here, but as soon as we pulled back to the 55, it just collapsed again. Once again, came up and then collapsed, came up and collapsed. This one here came back up and then moved over in this version here. Now let's take a look once again at this kind of a move. Here's our fractal below. Let's just test out a few of these things. Let's move our line over and see if we can use the higher time frame, 30-minute chart. Let's drop down to the 15 and let's see what happens. Well, we're making progress. We've got this kind of a move here. We don't even have a fractal except back up in this area on this chart here. Let's come over and see. Here's our medallion. We're crossing down through both of these. Okay. Let's go down to the 5-minute chart and see what we've got happening. And this is the perfect trade entry. Here we are in the 7 o'clock hour. This is the 18th of June, which was yesterday, Thursday. We're recording this on the 20th. I'm sorry, I'm off base. This is the 18th of June, Juneteenth. It is a Friday, and this is today's market action. So even the third day in from the announcement, we can see this particular move to the north, a fractal, a pullback, not too deep, so it isn't getting us way down in here. It's giving us a chance here. And you can easily now move because you know all of your charts to the north are heading downward. All of your higher time frame charts, you're being honored. And you can move to your 1-minute chart now and move over. And here we are. A quick move higher, but can't really get going again. Then this move to the, you wait until after this line gives you a signal. And here you are with your signal right here. And off we go to the south with a 37 pip trip this morning after we had our 7 a.m. opening. So I hope that helps, guys. Interest rate policy is critical. Time frames are critical. We'll try to give a link to our previous video down below this video. We'll also let you know that there's an opportunity to get all of these Metatrader indicators for free if this is your first time with us. And for sure, next time what we're going to do is talk about a new indicator that was mentioned in our Forex Power Surge book, the opening range. I want to show you how you can add that to your arsenal of tools to once again help reduce your risk and maximize your reward. Hope everybody has a great weekend. Thanks for watching. See you next time.